I'm here with my colleague Tobias Lindquist, who is the lead author on our latest ISA briefing on climate risk in practice. Tobias is a member of the European Research and Strategy team, but he's also our global lead within research and strategy on climate and carbon issues. The release of this ISA briefing note is really meant to accompany our joint report with ULI called Physical Climate Risks and Underwriting Practices in Assets and Portfolios. And we sought to go beyond the general discussion in the ULI report with some actual examples from LaSalle's own investment process. So we start that piece, Tobias, with a look at climate risk at the regional level. Tell me, what is the example of how we're looking at climate risk broadly?
Yeah, so the example for the sort of regional level climate risk analysis that we have is our climate risk index developed by the US Research and Strategy team. So that index, it relies on both official data published by the government, by FEMA, and data from third-party sources. And this is a US-wide index that we can use in multiple different ways. So as a first thing that it can serve is sort of acting as an immediate yellow flag, that it helps us bring out regions that we know have elevated climate risk. And the second approach that we use it is to integrate it into our target market tools. So we can add that in as a weighing alongside all the other factors that will, have some kind of impact on real estate performance. And the last example that we have for this is that it helps us inquire on how metro level performance factors such as migration pattern can interact with climate risk over time. And the report has some really interesting analysis showing both present day climate risk and migration, and what the migration patterns in the future, how they relate to climate risk in across the US.
So that's at the level of a whole investment region. As you zoom in, there's some other lenses and other analyses that can be used at the kind of more metro area level or the level of a country. I think the example in the paper in the briefing note is around the Netherlands. Tell me about that. Tell me about that piece.
Yeah, certainly. So I think Netherlands is a really grateful example to have because it's a well-known example. It's a country that's been fighting the flood for decades or really centuries. In our using our climate risk data providers, we see that both Amsterdam and Rotterdam, which are key institutional investment targets, they have quite elevated exposure to flood risk. But one of the things that our analysis don't encapsulate is what kind of mitigating infrastructure is in place on a regional level. And that is the place where the Netherlands really excels compared to most other markets and regions in the world. They have this program called the Delta program. It originated from a previous program called the Delta Works, going back to the early 1900s. But it is now a program that has the target to protect 100% of the Dutch population from flood by 2050 in a 1 in 100,000 year event. And that's really extreme if you compare it to what other mitigating infrastructure really aim to achieve. And I think it's well known that the Dutch are far ahead and above most other countries and markets when it comes to building and implementing these levels or these types of infrastructure. And that's really reassuring for an investor because they're very clear that they document what time horizon they're going to account it for, and they make sure that they're well funded in these kind of in their investments in this infrastructure. And that really gives reassurance to us as real estate investors into those markets.
Because if you just look at the raw data, the Netherlands looks pretty risky. But if you layer in those investments, you can see that these reassuring, mitigating things put in place. And if you didn't pay attention to that, you might underallocate to that as an important market. So
Exactly, yeah.
when you have that kind of view at the regional level, and then you really zoom into the level of an individual asset, what are some of the approaches that we take on that? There's, I think, an example in the paper from Asia.
Yeah, that's right. So we put in an example. It's a Japanese asset in Osaka. So that is another sort of local market that has fairly high exposure to climate risk, both driven by tsunamis and driven by extreme levels of rainfall. So the city itself, it sits on a very flat, low-lying plain. that doesn't have many options for natural drainage. So rainfall is definitely a hazard there. So this example is a development asset. And the good thing about that is that you have a lot more control in the development stage of an asset to really mitigate these kind of hazards. So the first thing that we did is elevate the floor plate of the asset. Secondly, in the very most extreme cases of rainfall, so that's the 1 in 1,000 year event, the degree will exceed that elevation, but to further safeguard the asset, we then move key building equipment up one floor, and that will minimize any type of damage and also make the asset operational as soon as possible once floods would recede. And the last step is very practical, is that we train property management teams on site. We equip them with things such as sandbags that they can place by the doors and shutters to mitigate floodwater entering the property.
Right. So, three examples from our actual practice incorporating climate risk: the regional level, the market level, and the asset level. Tobias, thanks for joining me today. If you want to read the full ISA briefing, that's available on the insights page of LaSalle.com, where we also have a link to that joint ULI report, which I really also suggest checking out. Thanks for joining today.
Thank you.